But well, we are finally ready to go. So good afternoon and welcome everyone to this informative session about DORA, the Digital Operational Resilience Act. DORA is a legislation to improve and secure digital operational resilience in the financial industry. And it is applicable to most financial entities and third-party information and communications technology providers, like credit institutions, credit rating agencies, among many others. But it will also affect business information providers. And that's why FEBIS decided to set up this informative session to understand better the requirements and implications of DORA and what it might bring to our industry. For that, we want to thank very much the support of KPMG Austria and our guest speakers of today, Professor Dr. Armin Kanel and Victoria Steidl, respectively Senior Manager and Senior Associate in Financial Services Advisory, who will guide us through this session and will take you or take your questions at the end. So please, if you can wait, we will answer all questions after the presentation. Slides and recording will be uploaded to FEBIS web and shared with the attendees. So as we are late, I leave now the floor to our speakers. Please go ahead when you want.
All right, while Vicky is trying to share the slides, also a warm welcome from our side, and thank you very much for the invitation to present the exciting topic of DORA to you. Many thanks particularly to Sylvia and her team for the kind hospitality, and we also want to thank explicitly our double agent Madita, which obviously helped to kind of broker setting up this session. As probably all of you may have heard of, we are dealing with DORA about a regulatory framework, which will definitely gotta change the regulatory landscape, not only for the financial services industry, but also for any kind of third parties that are offering services to particularly the financial industry in the European Union. And this also kind of explains why Vicky and myself, working in the financial regulatory advisory division of KPMG Austria, kind of presenting that to you. So consequently, what we will do is, despite the two of us are lawyers, we gotta make it as non-lawyer friendly as possible by providing you with the kind of regulatory requirements and give you also already the one or the other hint how the implementation of the DORA framework may look like. So what is the agenda that we want to cover today? On the next slide, we will obviously start with some general information to provide the necessary background for all of you, particularly those that haven't really heard of it yet or haven't really dealt with it. We'll then focus a little bit on risk management, the reporting aspects, and particularly then resilience testing, third-party service providers. This may clearly also be something for you. Then in addition to that, information sharing requirements, as well as then the respective competent authorities. So what you can see here more or less already from the table of contents is two things. First of all, that we have certain material requirements that we have to meet, and second of all, that we also have a fairly intensive formal component. Why? Because we do have competent authorities that will become active in this area. As I said, we typically come from a financial services background, so typically the national competent authority in the area of financial services is the one that will also then execute the DORA requirements. So therefore, I guess the first point that we can kind of derive from purely just the kind of table of contents is that we have to deal in a kind of formal setting where we have to meet certain standards, and that we will have an authority that will also kind of execute these regulatory requirements. Good, let's move on to the next slide. To provide you with a kind of holistic picture right from the beginning, DORA is part of the so-called EU package for the digitalization of the financial sector. You may be aware that the European Commission was kind of proposing this digital finance package in September 2020, and this digital finance package can also be displayed as some sort of a house, as we have done it, and more or less some of the important pillars of the house are including others, the overall digital finance strategy. Then we do have some technical aspects, for example, regarding DLT. We also have something that particularly these days is also in the news, regulation on markets in crypto assets, the meanwhile already famous MiCA framework. And then we also have the Digital Operational Resilience Act. So when kind of moving on to the next slide, please, discussing this DORA framework, then first of all, we have to be aware what DORA is all about. Silvia kind of mentioned it already anyway. It is more or less an EU regulation on digital operational resilience for the financial sector. And we are currently expecting that the final version of the legislative package will be proposed then early 2023. So therefore, we are, I guess, also fairly early in the process in kind of dealing with that. Why is that important? Because as you all know perfectly well, whenever we are talking about IT or IT-related projects, then typically these take time. So therefore, creating the awareness that DORA is in the pipeline, I guess, is essential. So let's move on to the next slide, please. And this will already be a first important point of today's presentation, namely to whom does DORA apply. And what you see here on the slide is more or less a fairly comprehensive overview of the scope of application of DORA. And what you can see here is that DORA applies to credit institutions, applies among others to central securities depositories, applies to the various types of management companies or alternative investment fund managers, trade repositories, crowdfunding service providers, but clearly also, and that's why it also had been mentioned by Silvia earlier, data reporting service providers, partly also credit rating agencies, insurance or reinsurance undertakings. So more or less to kind of sum it up, pretty much everyone is kind of captured here by DORA. If you move on to the next slide, please. So what are the general aims of DORA? The general aims of DORA are pretty much straightforward, and that makes actually then the applicability of DORA even more difficult. Namely, the general aim is to ensure the availability of the required safeguards for financial market participants to mitigate any cyber attacks and risks, and thereby strengthen the resilience to possible cyber attacks. So therefore, having that as the kind of main aim, there are a few measures that have to be taken, and the measures that DORA, which is a fairly comprehensive regulation, lays out can be split into 5 clusters. The first one is that whenever we talk about information and communication technology, ICT, we have to be aware that with DORA onwards, ICT related stuff is part of the respective risk management function. So that means typically for players in the financial services industry who have to have a statutory risk management function, this risk management function, at least in the broad sense, has to deal explicitly with ICT issues. In addition to that, we also have the requirement of information sharing between financial entities, which typically means if we are talking about group structures and we would have a cyber attack against one of the group entities, then obviously we also have to inform the others that the attack happened. Obviously, that brings us immediately into other difficult discussions, most notably data protection and the like, but also any kind of business secrecies, etc. So therefore, there is more or less this kind of bucket dealing with the information sharing between financial entities. In addition to that, we also have, and that's the one in the middle, the management of ICT third-party risk by financial entities. So whoever provides ICT services to the financial sector can expect that this may likely be amended due to DORA, because first of all, also third-party providers are captured now by risk management requirements, and in addition to that, what is clearly foreseeable that contracts that you may have with financial services providers will also need to be amended according to DORA standards. Another important aspect is that we have, and that's why I said at the beginning, we have competent authorities that DORA foresees. So consequently, against this background, there's also the requirement to have a harmonized reporting of important ICT-related incidents. So in other words, the regulator has to be made aware of the incident, the type of incident, how you got to deal with that, etc. Because at the end of the day, we're talking here about the if you like, cyber resilience and cyber stability of the financial sector. So therefore, this will be an extended responsibility of traditional financial regulators. And in order to make sure that you have the necessary stability in place, that you are testing your operational resilience on an ongoing basis, which is something that the financial industry kind of knows pretty well anyway, particularly since there are ongoing stress testing requirements. Let's move on to the next slide, please. So DORA, as we can derive it from this kind of initial remarks, is obviously broadly applying to the financial sector. From our practical experience, and in this respect, we also have to be fully transparent. We are typically covering the regulatory dimension, whereas others, particularly including Madita, are then covering the technical aspects. There are a few topics that we want to point out which are important, and they kind of relate also to what I said already just before. Namely, and that makes the whole thing a little bit more granular. So if we start with the ICT third-party management, there are, among others, requirements regarding the assessment of dependencies in DORA, which means we have to kind of evaluate from a financial entity perspective what is the ICT concentration risk. And just to be fairly blunt, if you're predominantly operating on the basis of Microsoft tools and the like, then I guess it's pretty much straightforward that there may be some sort of a concentration risk. In addition to that, there has to be a continuous monitoring of third-party management, contract amendments, as already referred to, and exit strategies. So therefore, ICT third-party management will clearly become an essential part of the framework. This is also important because within the financial regulatory scope, there is also a strong regulatory focus on delegation and outsourcing arrangements these days. So consequently, DORA will nicely fall into the same direction. In terms of the ICT-related incidents, and by the way, Sylvia demonstrated how you quickly sort out any kind of incident. There is to be the requirements that any kind of incident response management has to be there, which means you have to be prepared for incidents and how you then respond to them. So therefore, some sort of a manual how to deal with the various incidents is required. And in this camp, we also have the requirement to kind of communicate the respective strategies as well as the notification to authorities. Why is that important? I guess you are perfectly aware of cases where in your own countries authorities and the like had been subject to cyber attacks, and very often the communication of the attack was, let's put it that way, not necessarily diplomatic, which even made a bigger fuss out of that. And in addition to that, particularly if there are business interests involved, then obviously communication of such an incident is of crucial nature. We also have a reputational aspect and effect. So consequently, this is part then of the incident response management. In terms of the risk management, I have been referring that already anyway. On the top right of the slide, you see that there is clearly a dedicated role of the management body there, which means whoever is running the entity is then also ultimately responsible also then for ICT risk management, which obviously has significant implications on the duty of care of senior executives. In addition to that, and that will also be something that the regulator will closely look into, namely the assessment of operational resilience, particularly on the basis of what are the resources, what is the budget out there, that we also have the necessary knowledge to kind of deal with ICT risks. So therefore, we'll clearly see from a governance perspective a significant shift of governance requirements into the area of ICT risk management, and that is then to be seen under the overall umbrella of the risk management function of the company. In addition to that, we also have the requirement to share cyber information with other financial entities. I made already reference to group entities where it's clearly easier. But if you just think of other business partners which are not necessarily belonging to your own group, then it is clearly much more difficult, because under certain conditions you are required to kind of share such information. But then we are, as indicated already, in the midst of privacy and data protection aspects as well. And last but not least, since also authorities are involved, reporting requirements are on the table. We expect that there will be some standardized reporting requirements to make sure that we have a clear overview of the various incidents happening in the market. All right, Vicky, I guess the next one goes to you. I think you're muted, or at least, no, at least I cannot hear you.
Me neither. Is it working now?
Now it does.
Yes. Great. So as already mentioned, the establishment of an appropriate ICT risk management function is one of the main objectives of DORA. DORA therefore sets out a lot of key principles and requirements on the ICT systems and procedures that financial entities have to implement, and which are further regulated in extensive 10 articles. In order to keep in pace with the quick evolving cyber threat landscape, financial entities have to set up and maintain resilient ICT systems and tools that minimize the impact of the ICT risks, and that also help identifying all sources of ICT risks, and to implement protection and prevention measures, and to promptly detect anomalous activities, to put in place, most importantly, comprehensive business continuity plans and disaster and recovery plans. The latter components are important when there is an ICT-related incident like a cyber attack, so to mitigate and minimize the damages and to secure a continuity of the activities. In addition, there are also requirements on learning and evolving, so that the staff and also the management body have to attend mandatory ICT security trainings or awareness programs. And also from previous audits, the results have to be shared in those trainings or have to be incorporated in the risk management framework. Furthermore, there have to be implemented communication plans and procedures so that a secure and prompt disclosure of the ICT-related incident is possible, also in the case where there are severe impacts towards the customers. The European Banking Authority and the European Securities and Markets Authority has also been authorized to draft regulatory technical standards in regarding the protocols, tools and procedures that have to be implemented. As already mentioned, there are a lot of provisions regarding the ICT risk management, so we will go only in further details regarding several provisions. For instance, Article 4 regulates the specific duties of the management body regarding the governance and organizational requirements in relation to the risk management. So the management body has to play an active and crucial role in steering the financial entity strategies and risk management framework. It also bears the full responsibility for managing the ICT risks. The management body also has to assign clear roles and responsibilities for all ICT-related functions, and is also continuously engaged in the control of the monitoring of the risk management, as well as in various approval and control processes, and also in the appropriate allocation of ICT investments and trainings. In addition, the management body shall establish a role to monitor the arrangements concluded with ICT third-party service providers, or shall designate a member of senior management that is responsible for overseeing the related risk exposure. This last requirement only applies to larger enterprises and not to micro enterprises due to the proportionality principle. As already mentioned, the risk management framework is a big part in DORA, so the financial entities have to establish a sound, comprehensive and well-documented ICT risk management frameworks, which enables them to address the ICT risks quickly, efficiently and comprehensively. In order to do so, they have to set up strategy, policies, procedures and tools which are necessary to duly and effectively protect all relevant physical components and infrastructures, including computer hardware and also servers, and all relevant premises and data centers. The ICT risk management framework shall also be documented and reviewed at least once a year, as well as upon the occurrence of major ICT-related incidents. Besides, there also has to be an audit of the ICT risk management on a regular basis by ICT auditors that possess sufficient knowledge, skills and expertise in ICT risks. The frequency and focus of those audits shall be commensurate to the ICT risks of the financial entity. Additionally, there is also a formal follow-up process, including rules for the timely verification and remediation of critical ICT audit findings, taking into account also the findings and results from previous audits. Article 5, Para 9, also includes the digital resilience strategy, setting out how the framework is implemented and also including methods to address those ICT risks. Plus, the established risk tolerance level for the ICT risks has to be in accordance with the risk appetite of the financial entity. There has also been clear information security objectives that have to be set up, or also a mechanism has to be put in place that detects all ICT-related incidents. And also a digital operational resilience testing shall be implemented. Article 5 outlines also two requirements that again are not applicable for micro-enterprises. The first is the implementation of an information security management system that is based on recognized international standards. And the second, the segregation of the ICT management function and the control functions and the internal audit functions. Also, upon approval of the competent authority, financial entities may also delegate the task to verify compliance with the ICT risk management to third parties. The next, it's also important that financial entities identify all the relevant ICT-related functions and implement and execute measures to protect the functioning of the ICT systems. So financial entities have to review the adequacy of the classification of the information assets and also have to identify all sources of ICT risks on a continuous basis and also review the risk scenarios at least yearly. Also, all ICT system accounts have to be identified and all processes that are dependent on ICT third-party service providers shall be identified and documented. Moreover, in the case of major changes in the network and information system infrastructure, financial entities have to perform a risk assessment upon each major change. And they also have to conduct a specific ICT risk assessment on all legacy ICT systems at least yearly. The last two provisions, again, are not applicable for micro enterprises. Regarding the protection and prevention strategies, financial entities have to design, procure, and implement ICT security strategies, policies, and procedures to ensure the resilience, continuity, and availability of ICT systems. This also includes strategies regarding the confidentiality, the integrity, and availability of all ICT resources and data. Those strategies also include the establishment of a risk-based approach of a sound network and infrastructure management, or also the implementation of an automated mechanism to be able to isolate all information assets in the case of ICT-related incident like a cyber attack. Another most important objective of DORA is that financial entities have appropriate response and recovery strategies in place in the case of an emergency. So therefore, financial entities have again implemented various strategies regarding the ICT business continuity, like plans and strategies or policies. This is mostly important when outsourcing critical and important functions to third-party service providers. Those plans and policies regarding the ICT business continuity plan or disaster recovery plan have also been reviewed and documented on a continuous basis and also have to be tested at least yearly. Article 10 also provides a lot of provisions that only are applicable to larger entities and hence again not to micro enterprises. These include, for instance, the implementation of an associated ICT disaster recovery plan or the inclusion of an scenario testings of cyber attacks, or most importantly, the establishment of a crisis management function, which is important when the ICT business continuity policy or the ICT disaster recovery plan is activated, because this management function then sets out clear procedures for the internal and external crisis communication. So on those lists, you can see again all exemptions for micro enterprises. A micro enterprise is an enterprise with an employment of less than 10 persons and an annual turnover or annual balance sheet of less than 2 million euro. So regarding the reporting of ICT related incidents, financial entities have to set up a management process to identify and report all those and monitor all those related ICT related incidents. For that, the incidents have to be classified based on criteria from the ESA and also in order to later determine materiality thresholds for the major ICT related incidents. The classification then can be based on, for instance, a number of users or the duration of the incident or also the geographical spread or the severity of the impact. Article 17 then regulates the reporting obligation regarding major ICT related incidents, because there are 3 reports that have to be made within a specific timeline. So the first is an initial notification that has to be made to the competent authority without delay, but no later than the end of the business day when the incident has occurred. The second one has to follow in the form of an intermediate report, no later than 1 week after the initial notification. And last, a final report has to be made when the root cause analysis has been completed. DORA therefore sets out clear and harmonized rules for all financial entities. However, there are still differences in the reportings because only the major ICT related incidents have to be reported with those 3 notifications. And to determine when an incident is major, the ESA will therefore further develop materiality thresholds. So upon the testing, all those strategies and tools and methods that have to be implemented under the risk management framework, financial entities then have to, on a regular basis, examine and monitor the appropriateness and preparedness of the systems, and also have to look if there are any deficiencies, gaps, or other outcomes that make an incident, that there are any gaps or something, or as well they have to look if there are any corrective measures and they are promptly implemented in the case of an incident. Furthermore, those ICT systems and tools have to be reviewed at least once a year, and also by independent internal or external parties. The testings are dependent on the size, business and risk profile of the respective institution, and also include a range of assessment tests and methodologies that have to be implemented. Those programs are also regulated in Article 22, so you can see a list of all those tests and tools and systems on the right side of the slide. For instance, there is a gap analysis or a scenario-based test. Besides the tests on the previous slide, entities that have been classified as cyber mature or insignificant by the competent authority are also obliged to perform an advanced testing based on the threat-led penetration test. The classification is then again based on the size, scale, activity, and overall risk profile of the financial entity, and shall be conducted at least every 3 years by special testers that fulfill the requirements of Article 24. Those testers, however, have to be of the highest suitability and reputability and possess the technical and organizational capabilities and knowledge. And they also have to be certified by an accreditation body. And in the case of external testers, there are more requirements because they also have to provide an independent assurance in relation to the sound management of the associated risks, and also have to also be duly and fully covered by the relevant professional indemnity insurance. The testings then shall cover at least the critical functions and services of the financial entity and shall be performed on a live production system. When the testings are completed, the financial entity and the external testers have to submit to the competent authority the results and reports of the testings. So my colleague will then again go further with the requirements regarding the third-party service providers.
All right, I'm pretty sure that until now you have already the impression that the whole thing is fairly comprehensive, but don't worry, at the end we will kind of explain it also in kind of simple words. But nevertheless, I guess it's important to give more or less really a little bit of a dive into the regulatory framework to kind of understand the complexity and the regulatory requirements in this respect. So that's why I also want to refer a little bit to the risk management requirements for ICT third-party services providers, which may also affect you, because as already indicated right at the beginning, it is clear that we do have to have a comprehensive management of ICT risks, which are related to third parties, and typically in today's world, particularly when it depends on IT systems and the like, third-party providers play clearly a key role. So therefore, what entities have to make sure is that we have to kind of define critical outsourced ICT services. What are key services which are, for example, material to performing the business activity at all. We also have to make sure that we fully monitor ICT related third-party risks and that we have the necessary information as well as contractual reflection of the new regulatory requirement. So this means, for example, in rather non-technical language, that we have to have some sort of delegation requirement here, which basically means just from a pure company law perspective, whenever you make use of a third party, then first of all, you have to select the appropriate and qualified third party. You then have to make sure that you continuously monitor the activities of the third party. And if you kind of detect that the third party is not performing the task according to your standards, then you have to have the ability to take the task back. So more or less along the same lines, this will be the future treatment of ICT third-party services providers. So therefore, the points that you see here is that there are assessment and analysis requirements of the respective service providers, that at the end of the day, the management body has to be involved in the kind of decision making, also regarding the risk that kind of stems from third-party service providers. There is a register of information when we have ICT third-party services and incidents. My colleague already indicated that there are certain a certain application of proportionality, particularly regarding the nature, scale, and the criticality or importance of the service. So we typically kind of calibrate in this respect as well. And at the end of the day, and there comes the lawyer back into the game, it is a compliance requirement. And as we all know, compliance means that you ensure that you're acting in compatibility with the existing laws and standards. So therefore, this is something that has to be ensured on an ongoing basis. The next slides that you find here, and I'm not necessarily going into all the details here, because we also want to spare up enough room for Q&As. So that's why I'm kind of trying to explain what we have tried to explain you in the past 40 minutes, more or less by means of a fairly simple example. DORA basically follows an approach which is kind of logical and can easily be translated into our everyday's life, particularly if you have any kind of experience with firefighting. So consequently, what DORA basically in non-technical language requires is that each entity that is in scope has more or less a kind of firefighter squad, and the firefighter squad is basically there to fulfill certain tasks. The first task is obviously that we are perfectly aware of any kind of risks, weaknesses of the system and the IT systems that we are using. So consequently, knowledge of the system, weaknesses, and possible problems of the systems have to be known. Why is that important? Because if you don't know where potential problems are, then it's even more difficult to kind of cure them. So consequently, we have to kind of think of our own systems and try to kind of properly reflect it. The reason why we are stressing this this extensively is because what we have seen also in practice is that very often also our clients have no idea where the data comes from, what services are used, where certain servers are set up and the like. So consequently, DORA clearly requires that you have such an overview. When having such an overview, you also have to be prepared for any cases of fire. So consequently, also kind of literally speaking here, you have to know where the fire extinguishers are. And you also have to have a sufficient amount of fire extinguishers. So consequently, this is the second requirement. Therefore, having protective measures in place, meaning having certain ICT knowledge in-house is clearly helpful. If that is not the case, then you have to make sure that you are making use of third parties which can provide you with this knowledge. Obviously, just having the fire extinguishers do not necessarily help you in case of fire. So consequently, you also have to know how you make use of them. This means that you have to have trained technical staff and experts which can really fight the fire, so to say. And therefore, this kind of links back to what I said earlier. You have to have more or less an overview of the system. You have to have a plan of the building, literally speaking, in order to kind of make sure what danger or what risks are associated with the fire that may have broken out at whatever floor. What we also know is that obviously a fire or other related incidents can become bigger than expected. So consequently, if your own capacities come to an end, you also have to be prepared that you bring in additional capacities. So consequently, if you are in a group structure, then you may get in capacities from your parent company and the like. But the idea here is to make sure that we are not constrained by resources, and therefore, as I said, a sufficient amount of resources, potentially also from outside the organization, has to be more or less on standby. When we then have full control over the fire, and when we are then lucky to kind of extinguish it, then we have to kind of head into what you find on the following slides, namely that you have to kind of provide the necessary information. So if you just go, I think, one more slide further. Yeah, there are certain information sharing requirements in terms of cyber threat information and intelligence. How you have to kind of notify authorities, how you have to provide the information and the like. And this more or less has the idea that in addition to the successful extinction of the fire, you provide information how it occurred, which obviously should then impact the further resilience of your own organization, as well as of any kind of related parties. In addition to that, we also have to inform then the authorities, and the authorities are then tasked, and that is something that you find further down in DORA, to provide standards and regulatory measures to kind of prevent such fire incidents, literally speaking, again in the future. So therefore, if we just go then to the final slide, yeah. This is an overview of the competent authorities, but just from an Austrian perspective, which is more or less widely applicable in the other member states as well. It's typically the financial regulator, possibly a trade authority, who will deal with DORA. And that means that this kind of exercise of fire prevention will become regulated. That means we have to fulfill certain regulatory standards. It is also part of the risk management function and ultimately a reflection of the duty of care of senior management. So therefore, we hope that with this short glimpse into DORA, we created sufficient awareness that DORA is clearly a subject matter that is worth having a deeper look into. And obviously, we are happy to take any questions that you may have. Back to you, Silvia. Thank you.
Thank you, Armin. I hope you can hear me.
Yes.
Good. Well, I'm not sure if this has been a test, actually talking about all these resilience and cybersecurity, but the fact is that now I had become blocked, so I had to log out and log in again in a different device. So indeed, thank you very much for the presentation. Very comprehensive, but I think now we do have a very clear idea about DORA and its implications. So we are ready for taking the questions from the audience. Please, you can either unmute yourself or use the chat. Go ahead. Any questions?
And we're not surprised if you are shocked, because that typically happens when we present DORA. So you are more or less in a good company, because typically DORA is so comprehensive and complex on its own that you probably need a little bit of time to digest. But I guess this is also part of the exercise that we have conducted, because it is simply not something where you make the one or the other small fix. It's really a kind of comprehensive approach that you really have to kind of think through. So that's why making sure that there is the awareness that something along these lines is coming up on the regulatory horizon is, I guess, the most important message.
Yes, indeed. Well, I think probably, as you are saying, people have to assimilate a bit all the content, but
But maybe just to make.
Sorry,
maybe just to make it a little bit easier, to give you a little bit of an example that we have seen already a couple of times in practice. So among others, the Austrian financial regulator was already trying to implement certain measures in the light of DORA. So basically what they have been asking market participants is more or less, how are you kind of setting up your IT infrastructure when, for example, executives are using mobile phones, when you have the possibility to work from home, when you have, for example, like I guess in the FEBIS context, where members can enter more or less your intranet and the like, or that
Armin, we stopped hearing you.
Yeah.
So maybe, no, you are not mute.
No, he locked himself out.
We just have to be aware who more or less has access to our systems, where are our systems based, and consequently on this basis make a risk analysis.
Okay, I mean, we lost you for a while, but I think we got perfectly what you said. We have two hands up, at least from what I can see, and no preference, as I didn't see who raised their hand first, but let's go ahead with Enrique Velasquez. Go ahead, please.
Thank you very much for inviting me to your very good informative session on DORA. We have learned a lot, I think all of us. I'm having a question coming from the perspective of the members of Axis. Maybe I should have said that I am the Director General of Axis, and we represent the credit bureau community. And when I was listening to your presentation, I was thinking whether in terms of scope, this proposal, this body of law impacts our community of members. And why am I telling you this? Because you mentioned at the beginning on the slide about the scope that data reporting companies could be captured by this, but I think in the articulated text, that reference is made to companies that are reporting data in the capital markets, you know, consolidated tape providers and the like. So I don't think that captures us. Now, whether we would be captured as a provider of ICT services, that could be perhaps a different story. But then in the text, there's a reference to what is an ICT services provider. Is a company that provides data through ICT systems. Is that what we do? I'm not sure. I mean, I think DORA is basically capturing every entity in the financial services space that is regulated at European level. But business information services providers and credit bureaus are not. So I was just wondering to what extent this is directly talking to us.
It's a very good question that you have, and maybe my answer is kind of threefold. First of all, if you just look at it from a purely formal perspective, then there's clearly the argument that you may, and I'm careful in terms of phrasing it, that you may not directly be captured. Yeah. So, and we also have seen that some of the exceptions had been extended, particularly regarding smaller entities. So there is still possibly the argument in the one or the other case that you may not directly be captured. Nevertheless, what is fairly clear, and that's the second point, whenever you are dealing with a captured entity, then it becomes fairly clear, and there's decade-long regulatory experience that they will, whether you're directly captured or not, say, well, in order to deal with us, you have to make sure that you kind of comply with the standards that we have to comply with, because otherwise we have more or less a kind of loophole in our system. So therefore, there's the significant danger, and we see already with some of our clients this kind of danger that more or less from the firm base, they are kind of already indirectly extending DORA. And the third point, I don't want to completely destroy your hopes to be kind of direct. It is more or less an old EU saga that you start with a certain scope of application, which will in the next revision definitely be extended. And I'm pretty sure if you are currently sitting in the second row, then whenever we kind of extend the applicability, then the second row will come after the first one. But to be clear, I mean, obviously we could have a deeper dive in the particular case, but we also don't necessarily have all the detailed regulations, also not necessarily at country level, and there may also be differences because I have also seen there's a question in the chat which kind of relates into that. So there's also currently, from what we know, and we think that we have a fairly good overview, there's significant risk that some member states may even kind of go beyond the standards, because what we should not forget, very often EU law just kind of sets out minimum standards.
Thank you for the explanation. Thank you.
But if you have a question, then you know, really off the records, we could kind of make a concrete case analysis just regarding the capture.
Well, you will have the contacts of Armin and Victoria, so no worries about contacting them with additional questions. And we have also Michele Del Monaco with a question, right? Michele, go ahead.
Yes, thank you very much, and compliments for the webinar, very useful. Just a question, apart from the dimensional, do you know if for rating agency there is any reduction in the obligation, or do they report as the other?
As currently as it's currently the case, there is only the principle of proportionality, so to say, which means that if you would really kind of fall into what Victoria has mentioned, namely one of the kind of small entities, then you have an easing burden, but otherwise you are captured.
Thank you.
You're welcome.
So I'm just taking a look to see if I find any other raised hands, but at least from my point of view, I don't. So I don't know if anyone else has any other questions.
Yeah, if I may, I just have one from a global perspective. So how do you see the interaction of DORA and the bigger, like, cybersecurity EU regulatory landscape, you know, so be it the NISD Directive or the Cyber Resilience Act, or because to me it seems a little bit that the will of the Commission here is to have a kind of horizontal approach and try to capture to a GDPR, like, if you want a kind of a horizontal view. So is it your assessment? And the next question, which is kind of related, if this is the case and it's in a horizontal view, then do you expect that a lot of things are going to be dealt with by the technical standards and the guidelines that will come from ESMA and the EBA?
Well, the first question is, and Silvia was at the beginning very formal and even referred to my professorship, so that's why I'm going to answer as a professor. I guess you can kind of look at it more or less as a kind of table of contents, which means from an overall perspective, you have the overall chapter, which is kind of the NISD framework, and the NISD framework is more or less about the resilience of the economy in a broader sense. Okay? Consequently, it is not a surprise that also within particularly NISD 2, you have the financial industry covered. What DORA basically kind of lays out is more or less, I would say, the granularity of this chapter under the NISD framework, setting out really the kind of detailed requirements, particularly for the broader financial industry. And that is more or less what is DORA all about. Whether that is now exactly horizontal or to a certain degree also a little bit overlapping and vertical, I think that is rather a dogmatic question, but I think the message and the structure is fairly clear that the overarching economic framework is NISD, and then we have the detailed one for the financial industry, which is as I said, DORA. And the second question was like regarding the ESAs, right?
Yes.
Well, I think it's fairly clear from what we know and what we see that we will get ESA standards regarding DORA. I mean, again, with my head as a professor, I'm personally always very skeptical towards the role of the EBA, because we have an authority which is labeled the European Banking Authority, which is not supervising any single bank, but that's a different discussion. Nevertheless, where EBA comes into play is that it kind of serves as more or less the kind of coordination authority for the ESAs overall. So I would not be surprised, having seen what EBA has done in the past, if EBA would kind of take the lead to kind of come up then with joint ESA principles on DORA. And from what I know, at least from our regulator, there shall be the one or the other idea already in some of the ESA/NCA drawers.
Okay, thanks a lot.
You're welcome.
So I don't see any hands raised. I don't have a clear vision of the chat. So if Stephanie, you can help me with that, check if there are any questions still, and if anyone else
No,
is
I don't
raising
see
the hand.
anything in the chat. So, but feel free to raise the hand or ask a question if you have one. I guess everybody has to digest also the amount of information.
No, but you have our
Definitely.
contact details. You can also find us on LinkedIn if that is easier. As long as it's cyberproof, we also respond on LinkedIn. So feel free to reach out to us anytime.
What I would like maybe to leave here open and without having consulted with you previously is that maybe we do a follow-up on this later on when things are a little bit more settled, if you are available, of course.
No, absolutely. There's only one caveat, and the little caveat is that we then directly include Madita as well, because she is also obviously the one who is really into some of the technical details. And if everything has been digested on at the regulatory level, then we may also have some technical solutions. So we will get then Madita in as well.
Fantastic. That is
I'm
a
very
perfect
much looking forward to
combination. Perfect combination. So if we have no other questions, and thank you everyone saying it has been a good session indeed. I couldn't agree more. So thank you very much once again, our speakers, Madita, KPMG in general, and all the attendees joining us today. So see you in our next webinar. We'll be reaching out to you with information. Meanwhile, digest this information and do not hesitate to reach out to Armin or Victoria with questions.
All right. Thank you very much. Have a nice afternoon.
Thank you very much.
Bye.
Have a nice
Have a nice
afternoon.
afternoon.
Thank
Bye,
you.
everyone.
Bye-bye.
Thank you very much.